I think this pullback is an opportunity to buy. We've been waiting to buy the dip. It's been a straight up market basically since, especially the beginning of October, ironically. And now we're in a really positive seasonal time of the year. Stocks make their best gains November, December, January, best 3 months of the year. And I think you've got to be putting cash to work because, the biggest drivers right now are long-term interest rates are staying low, even with the Fed raising short-term rates. And so that's been a really positive surprise for equities because everybody expected long-term rates would follow short rates higher. Hasn't happened. So we're not seeing inflation pressure. CPI just 0.1%. For the past month, there's just really an ideal time for stocks. And what I love is that we're getting earnings that are beating about 75% are beating estimates within the S&P 500 for this past quarter, and better yet, about 65% are beating their revenue numbers. That's about 10 percentage points higher than usual on both of those fronts. And that tells you you've got a lot of strong power going forward. I don't just expect a 3% rally into the year end. I expect we can get a 10% rally in the first half of next year for stocks. And so I
Whoa.
think we're going to keep powering ahead.
Wow. Okay. So this gets better, is what you're saying. If you're looking for 10% more upside first half of next year, and you're saying, look,
Yep.
conditions are ideal, doesn't get any better than this. On top of that, you finally got tax reform coming through. Earnings are delivering. Rates are going to go up, but the yield curve is still going to stay relatively flat and accommodative. You think, in terms of rotation for the market, is it going to be financials? Is it going to be cyclicals? Is that where you should be in?
Well, still, I think there's opportunities in tech. I was buying some Apple today. I think Apple, hits it out of the park still into the holiday season with the iPhone 10. I was buying some Broadcom, which has been beat up on this whole takeover news with Qualcomm. I think Broadcom's a leader in the chip sector, which has been one of the hottest sectors within tech. So, yeah, buying some tech, but also buying some financials. I think Visa is my favorite financials, buying a little bit of that today to add to my position there. I think the credit card issuers are one of the strongest financial sector players. And I like casino stocks. I like Wynn Resorts and I like Las Vegas Sands. I bought both of those some more today on the dip. And so I think these are leaders that you can expect to not just go back to where they were here at their highs just recently, but actually push to new highs into year end and into the first half of 2018. So you want to buy those leaders. You don't want to buy the dogs like GE that are stuck kind of trying to figure out their way here. You want to stick with what's working here.